February 10th, 2025. The market's closing in 6 minutes, so if you hear a loud bell in 6 minutes, that's why. Just wanted to make everybody aware of that before I started the video. Today was basically a big leg one, leg two day. And the most important thing, if you take nothing else away from this video, I'd like you to think about this, is that when you get a first leg, a lot of times the second leg is similar in size. You can see the open of the open of bar 5 was the start of leg 1, and the rally lasted to the close of bar 16. And then if you take that size and you put it on the low of bar 33, that's essentially where the second leg went to. Now, why do I use the bodies for the measured move? Because it's the most conservative measured move, and generally the more conservative measured moves get hit more often. So it's better to just use the most conservative measured move you can to just increase the chance that it gets there. Because when you're using, if you use the bodies and stuff, it doesn't, or if you just use the tails, it doesn't quite get there. But it's a big leg 1 and a leg 2. So why is this leg 1? Why is bar 5 through bar 16? Why is this considered leg 1? Well, look at a 15-minute chart. The reason it's leg 1 is because on a higher time frame, that's some sort of breakout. If you look at a 15-minute chart, it's 4 straight bull bars. It's pretty clear that that's leg 1, so it's not surprising that leg 1 got a second leg if you're just paying attention to the 15-minute chart. You don't have to go look at the 15-minute chart, but you have to understand that a tight channel is a breakout on a higher time frame. And so that is the most, far and away, the most critical thing I think to take away from the video, if nothing else, is that tight channels are just going to be breakouts on higher time frames. Bar 1, a bear bar closing near its low. Excuse me. Bar 2, consecutive bear bars, but a large tail on the low of bar 2. So it's not really a super convincing breakout. Also, if you were looking at the Globex, I looked at the Globex 15-minute. There was a really, really large rally yesterday at some point, basically to open the Globex session. There was a really large rally, and then we had been in a bull channel ever since. So I thought the odds that we go too far down were not all that great. Bar 3, a bear bar, but a large tail on the bottom of 3. So probably buyers somewhere below if we keep going lower. This isn't a very convincing breakout. Bar 4, you can see a large tail on the top. Do you sell below bar 4? Well, if you do, you're taking a chance that it's a low 1 in a bear trend. And if this is a bear trend, the breakout is not very strong because 2 and 3 have really large tails on the bottom. And your potential open gap, if this was a bear trend, would be with the 1 low and the 4 high, except for the fact that that gap closed. So with the 1 hot low overlapping the 4 high and the large tail on 2 and 3, taking a chance that this is a bear trend by selling below bar 4 is probably not a very good trade. Bar 5, an outside up bar. Do you buy above 5? I don't know, maybe. I probably would wait for at least one more bar. 6, you have an outside up bar, a bull bar, and a follow through bar. So you could buy the close of 6, taking a chance. If you want higher probability of a second leg, you can wait for bar 7 and buy the close of bar 7. At this point, very, very likely we're going to get another leg up. Bar 8, 4 straight bull bars. So you can simply just buy the close of bar 8. Again, that's just the 4-bar micro channel study that I've mentioned a million times at this point. But you can just buy the close and expect another leg up and exit when the bears need a second leg. And I think that 18 is the bar. You can get out in the upper third of 18. I'll get to that actually. 9, an inside bar. Good for the bears to get a bear bar, meaning the pullback will probably start soon. However, it's not really all that convincing. There's a large tail on the bottom. So I would imagine we're probably going to get back up above the bar 8 high. Bar 10, an inside bar. It's consecutive inside bars. So probably, we're probably going to get back to this price at some point. It's a trading range. An outside up bar on 11, good for the bulls, but a large tail on the top and a large tail on the bottom as well. Not really convincing that we're going much, much higher. I actually thought, to be honest with you, that this rally was going to reach the bar 8 high. The reason I thought the bar 8 high is we have a spike to bar 8 and then a spike on bar 7, a pullback on bar 8, and then a bear channel the rest of the day. So I assumed we would get back to the high of the bear channel with the way this was moving. Obviously, that did not happen today. So bar 12, consecutive bull bars. You could buy the close of 12. You could buy above 12, basically taking a chance that the higher low from 11 is going to hold. So if you're buying above 12, you're taking a chance that this is, in fact, a bull trend. 12, a large tail on the top. Okay to be long. Okay to be holding long. You can buy for any reason. It's a bull trend so far. But there's a lot of doji bars and a lot of overlap. So it's while it is likely that we're going to continue higher, we might have to pull back first. 14, a doji bar. So not really that great to be buying below 14. I'd probably just rather wait. And then an outside up bar on 15. Good for the bulls to get a bull close here. 15 was the bear bar for a lot of the bar. had it closed on its low, a lot of the bulls would have exited. And so if you were watching the bar, you'd notice in the last minute or two, it got bought back up and became a bull close. Because of that, the bears who shorted for any reason exited, and that caused the basically, quote unquote short squeeze on bar 16 that caused that bounce. 16 is a climactic bar, though. I'm not sure how much higher we're going. After 16, we're probably going to start to go sideways to down. 17, a bear bar with a large tail on the bottom. I think that we'll probably go at least a little bit higher or at some point, but this is probably 3 legs up: bar 8, bar 13, and bar 16. So I don't think that necessarily the bulls need to go a lot higher right now. What's the target, right? Think about what I said 2 minutes ago in this video. Bell's about to go off, just so everybody's aware. Think about what I said 2 minutes ago in this video. Why was this a target? Spike, pullback, and then the bear channel started. So the high of the bear channel is going to be a target. If the high of the bear channel is a target, logically, what is the target for the bears on the close of bar 18? Because 18 needs the second leg. It's 3 legs up. So logically, what's the target for the bears? If the high of the bear channel is the target for the bulls, then the low of the bull channel is the target for the bears. So I think the first target for the bears is the bar 11 low. The reason that I think it's the bar 11 low is because that's the low of the bull channel. So you have to keep that in mind. 19, a bull bar. It rallied into the upper third of 18 and then reversed back down. I think it's okay to be long. By the way, I turned my volume up on my computer. I don't know if that affects the microphone, but I turned the volume up a lot on my computer. So just everyone let me know if I sound more clear, and I'll keep the volume up on my computer at all times. Bar 20, a bear bar, but a large tail on the bottom. And 21, another bear bar, but tails on both sides. It's a decently tight channel down from 17 to 20. I think that your energy is best focused on figuring out when we're going to get a second leg from the tight channel up. 22, a giant bear bar, but a large tail on the bottom. It basically goes to the bottom of bar 11, which is basically the bottom of the bull channel, as I've mentioned before. So this is an area of support, and you can see we get support bar 23. Do you buy above 23? Well, it's a high too, but no, this is the channel down from 17 to 23 needs a second leg. It's not worth buying above 23 unless you're willing to buy more below 23 and scalp out around the close. 24, a low one short, but probably a third leg down. So hard to sell below 24. And then you get a follow through bar 25. But again, there are bulls scaling in somewhere down here. Bull bar closing somewhat near its high, 26, but a tail on the top. I'd imagine we're going to get a second leg sideways to up. 27, a doji bar. We might go a little bit lower towards the bar 25 close, but I don't think that we're going that much lower. But I don't know if we're going much higher, because if you bought above 26, 27 isn't a good follow through. So really just a tight trading range. 28, an outside bar. I think we're going higher, but I don't know if we're going higher now. We might have to go pull back deeper first, because the tight channel down to bar 25 is probably still going to get a second leg down. It might come in the form of a lot more of a sideways move, or it might come in the form of some sort of move down like we got. 29, a bull bar closing near its high. It's a possible ledge, 27, 28, 29, but it's 3 bars, so not as powerful as a 4 bar ledge. And then 30 consecutive bull bars closing near their highs. Good for the bulls. We should get a second leg up, but you're buying the top of a tight trading range. 23 through 30 is a tight trading range, so buy the close 30, not all that great. 31, a bear bar closing near its low. You can sell it betting on a failed breakout above the tight trading range, and you're going to get a breakout, hoping for a breakout below the tight trading range, but it's just difficult to be, you're basically selling for a second leg down, which is fine. I don't have a problem with it, but it's just difficult to be trading in tight trading ranges. 32 and 33 consecutive bear bars. So follow through to the downside, but large tails on the bottom, some sort of parabolic wedge on a lower time frame. Down, up. And then on 34, down, up. So 3 legs down. Do you buy above 34? I thought if 34 closed stronger, it was a good buy. I waited for 35 and I bought the close of 35. What I did today, I bought the close of 8 and I exited below 18. I bought the close of 35. I wanted one more bull bar after 35. Logic being bad follow through for the 3 bar micro channel. I ended up exiting at break even, but during 37, but probably could have held on to that one. I ended up getting back in, I think 42 or something like that. And I ended up pretty much break even throughout most of the day. And I sold the close of 30 of 65 with the stop and measured move up. And I exited at the low during 73. That's a trade based on the 3-bar micro channel, and I just spent a lot of time studying that very specific setup. And whenever I release my 3-bar micro channel study, it'll be a while, but that type of trade will be in there. Anyways, 34, 35 consecutive bull bars, probably going at least a little bit higher. 36, about a 50% pullback of 34 and 35. Some traders buy the close of 36, and we get a bull bar closing near its high, 37. 35, 34 and 35 is leg one, so expecting a second leg up for the bulls. 38 consecutive bull bars, a large tail on the top, and then a reversal down 39. We're still, potentially within a tight trading range. It's a bull micro channel, possibly 2 legs up. I don't know if we're going to go a lot higher at this point. I think you can get out below 39, but you have to be willing to buy again above 41. If you're buying above 41, you just have to have a really good calibrated expectation that you're possibly buying a third leg up. It's okay to sit through pullbacks in leg 1, but it's less okay to sit through pullbacks in leg 3. So if you bought this close, you can sit through the pullback. If you bought this close, you probably don't want 42 or 43 to be a bear bar. You probably want good follow through. And you get good follow through 42, more follow through 43, a doji bar 44, so a 3-bar micro channel and a pullback. Bull bar closing near its high on 45. You can stay long. You don't have to buy above 45, but it's okay to stay long. Outside down 46. We basically just enter a tight trading range. 48 might need a second leg. If you exit below 48, you can buy again above 52. Probably bulls get out below 54. It's a little bit difficult to stay long after 54 since we have 3 or 4 legs up, and it's a late leg, 53, 54. So if you're buying up here, you have to be really cautious. I would probably get out below 54. If you do get out below 54 and you're trading always in, you can buy again above 56 and then probably get out below maybe 62. Or honestly, 59 is disappointing. If you're buying up here, if you're buying above 56, you're hoping that we just rally straight up. And after 58, I think 58 is a little bit disappointing, a bear bar. So you could exit below 58 if it trades below it. Instead, you get a bull bar 59. You were probably hoping 59 was a better breakout and that it closed on its high and became a parabolic rally. Instead, disappointment. And then 60, you can get out below like 62, like I said. I think 65, bad high 1, tight channel down. Like I said, 3-bar micro channel, first reversal should fail. And then second leg sideways to up, 67, 68. You could argue 69 is leg 3. And then 70, a bear bar closing near its low, a low 2 short or a low 3 short, depending how you'd like to look at it. And it's okay to sell. And then we got to sell off to the downside. Obviously, very small day, 60.96 to 67, so like a little over 30 points. For trades today, you could buy the close of 6 if you wanted to. Higher probability, 7, 8. You can buy above 12, bull bar closing near its high. And you probably have to get up below 18. Where do you go short? I don't know. If you're a bear looking to trade always in, you could maybe sell the close of 22 and hold until 35. Bulls can buy again above 35. You could sell below 31 as well. You don't really have to get out maybe 48 or 54, something like that. If you get up below 48, buy again 52. Get out below 54, buy again 56. And you can get out, 61. As far as the daily chart, the daily chart is kind of interesting right now, in my opinion. So the bears keep getting sell-offs. Big bear bar right here, 240 points, huge bear bar. We have a sell-off here, a sell-off here. This day was a big sell-off, but it gets bought up. This was a good-looking reversal, but a strong reversal back. Friday had a pretty large sell-off as well, and then again, another strong reversal. So the bears are continuously getting reversals down, but the reversals down, every time they get one, gets a really strong reversal up. That makes me think we're at least going to a new all-time high, and we might get some sort of measured move. The market looks like it's forming some sort of triangle. And triangles are relatively neutral, and it's not like we have to go up. But the thing that keeps happening is we get these sell-offs, and none of them are lasting. We have one attempt for a big sell-off. It got 3 legs, good for the bears. Attempted a sell-off, it's bought up. And there's 3 attempts in here to sell the market off. So when you get 3 attempts, the forces might act in the same way a wedge would. So I think that the bears might be disappointed in the price action over the next week or two. And like I said, the weekly chart, an inside bar. It just started though. So, I think we'll probably end up going above last week's high. It's a trading range, but I ultimately think we're going to end up going a little bit higher, channeling a little bit higher for at least a little while. All right, that's going to be it for this review.